The crypto market has suffered a very substantial pullback, and the KBC letter talked about gold. In fact, it said that gold began to move in the opposite direction to crypto. And what I mentioned was that gold was doing that across the weekend, and we can use PaxG to actually emulate what gold would do. I also mentioned in the video on yesterday's video, that we needed to watch gold. I put it right at the end because I always save the best to last. The concept being that the Bitcoin, the crypto market, picked up on weakness inside the stock market and it front ran it. But there's a lot more to this. Grab a coffee, sit back, relax. This is going to get really interesting, and let's run the numbers. Welcome back, elite members of the CTKS method. We can see in the past 24 hours, we've had quite a bit of a sell down inside the crypto market. It may look like a lot, but it actually isn't that much. But if you were trapped in certain projects, you would be feeling the burn. I've said for many years that the charts will tell you the truth in advance. They tell you what reality is actually doing, and the news will catch up later. If you're looking for the why, you're already actually looking in the wrong direction. Just look at the chart. What the chart tells you is the truth. There were definitely a lot of liquidations across the past 24 hours. Current 24 hours, 1.8 billion. 427,570 positions were wiped out. And the great percentage were long liquidations. When the longs get liquidated, they have to sell to cover. That means they drive the price down. And you can see on a relative basis just how few shorts got hit. The shorts now are exceedingly confident, exactly like the longs were before they got whacked. One key question, is it over? Is it all done and dusted? Is there more to come? I'll get into that as we go through the video. There's a lot of things that you need to be aware of. When we look at the top ranking crypto projects, we can see over the past 24 hours, they've come down quite a bit. From time to time, I get asked why I concentrate on the top cryptos. One thing to understand, there are currently 21.68 million crypto projects that you could put money into. Just let that sink in for a minute. 21.68 million different crypto projects. Now, what does that mean? It means that the money is getting spread far and thin, and that is a big problem. The big end of town will concentrate their funds in high liquidity cryptos, so this is something to be aware of. When we look at the greatest gainers over the past 24 hours, we can see that we've got some gainers. PaxG is what I've been talking about recently. PaxG is on Binance. Tether Gold is on Bybit. Now we're seeing some really interesting stuff. The greatest gainers, basically stable coins. Now we know that indicates a massive sell-off because stable coins aren't supposed to move at all. Turning to the greatest losers, we had a lot of liquidations across the board, and we've seen just in the top 10 that nearly 10% reductions on average. As you go farther out the risk curve, what happens is that those projects will go down far, far more. It all depends on what Bitcoin does. The crypto market is currently neutral in terms of fear and greed. And when we look to the stock market, we're not seeing a lot of red across the market. In fact, Apple and Nvidia did quite well, Oracle did well, and Tesla didn't do too badly at all. It may seem that it's all over inside the crypto market, but September is still positive for Bitcoin. And the stock market is currently registering 63 in terms of the fear and greed index. A lot of people will ask, what the heck caused this? And there are drivers. And if you've been doing your cheat sheet, you know exactly what they are. And in terms of key economic data releases, not much. In terms of the Fed, actually changing its percentage on rate cuts, pretty much exactly the same. About a 90% probability of a 25 basis point decrease on the 29th of October. The true cause of that sell down inside crypto resides in the cheat sheet. And please let me know if you saw it in advance. We knew the crypto market was going to get hit, but it got hit particularly hard. Before we get into the why, let's just have a quick look at Bitcoin. The shorts are getting really positive. They're getting confident. Now, what does that mean? The shorts will anticipate a longer term target probably within the next week or so between the 104 to 107,499 mark. This is where they will expect the crypto market to find stacks and stacks of support because they'll use recent indicative price analysis. We'll look into this in a little while, but just to tell you, there is no structure whatsoever in that area. It's above, it's below, but it's not in. Does the macro view support a declining market? Well, we can see that China's market is starting to put in a bit of a sell arc here. And when we look at the Nasdaq and the S&P 500 and the Russell and the Dow, they're actually doing quite well. Australia's market is retracing at the current time, but Taiwan's market is doing particularly well, as is the Japanese market. To understand what's happening, you need to look at two charts. The VIX, or the fear gauge of the main markets, is the first one. The VIX has been basing for some time, and we did have a bit of a push up in the past trading session. Now, a lot of people will say, but Ken, there's no real relationship between Bitcoin, which is that blue line, and the VIX. But if we do something quite interesting, if we invert the scale, do you see any relationship now? Please let me know in the comments. And what do you think this means? Well, I'll give you a bit of a hint and a bit of an edge. If the VIX starts to base up, because we see it's been basing for quite a while, if it starts to pull itself up, we'll get a spike up. A spike up in the VIX will take the inversion of Bitcoin. Let's just uninvert that so you can see what that means. Okay, here we go. So basically, if the VIX spikes up like this, we would anticipate more negative downside action. But Ken, what caused the VIX to spike? The VIX has been basing for way too long. It needs to flush out the longs so it can reset the markets. Market momentum overall in the long term is positive, and you shouldn't be concerned about these kind of things. We see them all the time. For example, if we go back to around August, we saw the big spike in the VIX, which took Bitcoin from about 120 down to around 113. What did it do next? It said, boys, I'm out of here. And it just shot up from that 113 all the way to 123. Now it's come back. It's gone up, it's come back. Now, what you need to do is you need to ride the waves. You need to learn how to sell, how to buy back, and how to BORSOG. What the heck is BORSOG? It's buy on red, sell on green, and it's a vital skill to have. At the start of the video, I talked about the Cobra C newsletter, or the letter, and I just said they do a fantastic job of their analysis. What they were saying was, I don't understand it. Gold and Bitcoin move together all the time. So what the heck happened? When we look at gold, and this is the second reason that you need to pay attention, I have been talking about this for about 3 days, so we do tend to pick up on things really early here. When looking at gold, we can see that that blue line, which is Bitcoin, and the candlestick pattern, that's gold. Yeah, they do move together, but not always. In fact, typically when there's a big move up in one does the opposite way. Look at this, and a big move down as well. When we look in November of last year, gold actually retraced and Bitcoin absolutely went for it. And then it took some time, and then gold started to go again. And when that happened, what did Bitcoin do? It came down as gold rallied up. Now, what does this mean? It means that gold and Bitcoin were never in sync anyway. And we see this kind of behavior all across the board. For example, if we go back to 2024 in Feb, we can see that gold and Bitcoin were moving together, and then all of a sudden Bitcoin took off, but gold went the other direction. Now just keep in mind, this is on a weekly basis. This is not on a daily basis. This is weekly. So when you see Bitcoin taking off and gold going the other way, what do the gold bugs say? Well, I don't know what's going on. They're just not following each other. And all the crypto bugs say everything is fantastic. And look at gold when it just pumped up. That pretty much marked the top of Bitcoin, and it starts to come down. So this is kind of revealing a bit of an inverse relationship. As Bitcoin comes down, gold goes up, and vice versa. A lot of people say they buy the dip and it keeps on dipping. That's because we need to understand, does the dip have continuity to it? Is it going to just bounce up, or is it going to keep on going down? Now, the way that gold is going at the moment, and we understand the VIX is basing out, we could have more negative downside action inside the crypto market, and that's absolutely fine. You always want to buy at a discount. So many people say, just say you're a gold investor, and you were looking at this, you would say, oh, I want to buy gold here at this local bottom. But the point is that most people just get out when the price turns red, and they get in when the price turns green. So their margin, their profitability is getting cut to shreds continuously. This comes down to the fact that people want to feel certain about what they do. That certainty is the driver of consistent losses. Instead, you want to prepare, so let's go do that. When you're preparing, the first thing to understand is that if Bitcoin comes down, it's going to pull the entire crypto market down with it. And the smaller alts or the more volatile alts are going to get pulled down substantially. Keep in mind that relationship between PaxG, which is basically digital gold or crypto gold, and the crypto market. It's very important to understand cross-correlation. And inside our community, we are experts at it. For the members of the service, just going into those marked up charts, we can see that PaxG did pretty well. PaxG doesn't often move by much, and what you do with PaxG is just overlay gold, because the gold levels on PaxG are the correct ones. Now, what fared up the worst? It was unfortunately the meme coins. The meme coins are the gateway to retail, but when retail sees red, guess what they do? They sell. They get angry, they sell, just say, enough of this damn stuff, they destroy desks, etc., scream, yell, and just walk away from the crypto market at exactly the wrong times. Instead, you want to be prepared. Now, is the potential for more negative downside action in the markets? Of course it is, because we know that the VIX is just basing. It's put in a bit of an entree. It's designed to show where things can go. Now, does that mean you give up all hope, you abandon everything, and say Bitcoin has no strength, therefore the alts will have no strength? Of course not. We don't do that at all. We ride the waves. But the key thing is, when you're riding a wave, make sure the wave doesn't drown you in the process. And the students from the Profiting course, you already know if something is weakening or strengthening. Guarding your capital is really critical. Now, one thing to just look at, if we look at the S&P 500, the Dow futures, the NASDAQ futures, and the Russell futures, we see a lot of constructive action. Now, what does this mean? It means the shorts may just get an ugly surprise in the next 24 hours, because Bitcoin does move directionally and gravitationally, and you know that, with the major market indexes. But it's not moving majorly and directionally at the current time. Well, that may be the case, but if you just zoom in, you'll see an association here that just can't be missed. One of the things is that we want to understand the intercorrelation between crypto and the main stock market. Remember, I said in that Cobasi newsletter, oh, it's always a tongue twister to me. Basically, that Bitcoin and crypto can front run weakness and strength. Now, what we've seen is a little bit of strength inside the futures and a little bit of weakness. Bitcoin was front running that. It's also front running the strength inside the main markets at the moment. Do not discount crypto as an incredible signal. The other thing to understand, price is always moving in a wave. When we look at Bitcoin and Forex, this is Bitcoin, and of course the weekend just means Saturday and Sunday Forex has gone to sleep, having a bit of a snooze, and then it comes back and it wakes up. Now, we saw that Bitcoin really sold down. What else did we see? When we look at the DXY, when we look at what are these things, how do we see what this is? Okay, so when you're looking at that blue line is the DXY, and this is dollar yen. Dollar yen and the DXY hang out together. You can see that there's weakness in there, but dollar yen is starting to turn around. Notice this as well. We would expect an intermediate bounce, and hopefully we could get back up to around this area. Now, what is that area, Ken? Where is that? That's around that 114.100. Now, this is just purely on a helicopter view, a retail view, but you must know how retail thinks. Now, if we get that bounce up, it doesn't mean that we're going to continue further on from that. We need to look at the structure. And it doesn't mean that we're going to get there in terms of crypto, but this is the stacking of probabilities that you require. One thing to always understand, when the shorts or the longs get a big win, they must take profits, they must cover. And they cover, they close out their positions to make a profit, and then they go back in when it's safe for them. Undoubtedly, this big sell-off did catch a lot of people by surprise. It was incredibly strong. But if you were managing your position throughout this, you weren't hit too hard. And people are starting to come in and buy. And when we look at net short positions, we can see that the shorts were very, very positive up until about here. And then as price started to go upwards, they started to say, ouch, we're not quite so sure, not quite so certain if it's going up or if it's going down. Another way that we can stack probabilities is to compare commodities against Bitcoin. Bitcoin is this blue line. Now, something here should really strike out. Look at this. Bitcoin went up, went down. What did silver do? And these are silver futures. What did they do? They went the opposite direction. Look at this. This is really quite intriguing, and it's something that you should keep on your radar. If we find that silver is going for it, and we know there's a good association between silver, a good association between gold. Remember how we just zoomed out and look at gold and Bitcoin together? Silver and Bitcoin together have a very similar pattern. So we know if there's upward momentum in silver, upward momentum in gold, that is generally really good for the crypto market. But there can be times that they go out of alignment, and we must pay attention. I was trading and investing inside the stock market for many, many decades, and one of the things that it always irked me to use a 2.5 men statement, that basically it didn't trade 24 hours a day. And being in Australia, when the US market's open, it's like it's the difference between night and day. Literally, when I go to bed, the markets open up. So it's very difficult to find the window. When you look at the crypto market, it's open 24/7. If the stock market is selling off wildly, for example, that's not a caught position as it often was. And if the US markets are selling down, the Aussie markets will sell down as well as the Asian markets and the European markets. So something just to bear in mind. If we look at the past 24 hours, we saw Bitcoin getting very weak. Why did it get weak? Because gold is strengthening. Why is gold strengthening? It doesn't matter why gold is strengthening. Gold is strengthening. And when it strengthens, it's in all likelihood because of the VIX. Why is the VIX strengthening? Because it's been basing for too damn long. It's just been basing. We're way overdue for a flip up. And when we get a flip up, it is an ideal buying opportunity. But you must manage your position and you must know how to buy and to sell and how to prepare. A flag of consistent profitability is just simply to look at the chart and not look for a reason. The chart is the reason. The chart is the truth. And the truth comes through a chart through intercorrelation and interconnection. Now, what does that mean? That means that gold was just pushing up because the VIX was basing and starting to come up. Risk-on asset classes such as Bitcoin feel it first. They are the canary in the coal mine. Now, what's happened to the major market indexes since? Since around this bottom, you notice that they're coming down, but Bitcoin is really over-exaggerating it. As the market futures bottomed out, so too, basically, we saw this bottoming in Bitcoin. Now, we can see the major market indices all going up, and these are global. These are literally all around the world. Now, what is Bitcoin doing? It's saying, I don't really buy it just yet. I don't think the VIX has finished spiking up. Now, how do we track the VIX when it's not trading? We can use the VIX futures or we can actually use gold. When you get a VIX spike, gold tends to party, so that is really important. Okay, Ken, I understand, but how do I prepare? Well, the first thing that you can do if you're inside the crypto market, just go to PaxG or go to Bybit, Tether Gold, and just grab that chart up. And then overlay the gold indicator on top of that. Also overlay Bitcoin, which is this blue line. Now make sure that both of your scales are log and automated. Now I'll just go across here, just make sure that little A is on and the log is on, the A is on and the log is on. Now that will align your two charts together. Now if we do an inverted scale on Bitcoin and gold, it's pretty damn obvious that gold is moving inversely to Bitcoin. I don't think you could get a better relationship than that. I mean, it may be a bit toxic, but it's a good inverse relationship. The next step is just to turn on your indicator. Now, I'm not going to turn it on because unless you understand how to read structure, there's too many lines there. So what we use are called SCs. Now, these SCs or Stanfield zones just encapsulate different CTKS levels, also known as SLs or Stanfield levels. One thing that we've noted across the weekend, and this is what I was saying with that particular post on X, we had this like around that 3700. There was all this overhead structural resistance. Gold came up into it after basing here. It came up into it and just across the weekend couldn't get through it. But as soon as the markets opened, it started to go higher until we had this around that 3730 area of overhead structural resistance. Now what we need to do is to look higher. Now in order to look higher, I've got to turn Bitcoin off because they'll lose their association with each other. Just moving it up, we can see that there's this underpinning structural support now at around that 3736 mark. Very light overhead structural resistance at 3776. It gets higher and this green line is the target for this month. Inside the service, which is this thing, I always do targeting on each of the cheat sheet marked up charts. And that is all because we need to get some understanding as to where things could head out to the end of the month. The 3792 is on the cards. Now, what we see here, these are all really, really light, even above. So gold could absolutely outperform. Now, what does that mean? The VIX is basing, slight tick up. Bitcoin, more than a slight tick down because it's feeling that the VIX is about to spike. Gold is confirming its inverted direction and has not really that much above it. Now, could gold come back into this 37.36 confirm and go higher? Absolutely. Just remember, price is always moving in a wave. Even here, this is just a 2-hour basis. Actually, I'll just go down to a smaller time frame. When there's overhead structural resistance, such as this particular level on gold, what we can see is that price comes up to it and then all the sellers action. And if it can get above it, it's going to the next level of structure above that. So one thing to always bear in mind, as we look at any price chart, it's always got up and down, up and down, up and down, up and down. It always does this. But for some reason, people think if it's going up, it's going to do this. And if it's going down, it's going to do this. It doesn't do that. Price is only constrained between structural support and structural resistance. If overhead structural resistance is light, it generally can push through it without too much effort. But if structural resistance is heavier, you'll get this consolidation. And if there are a lot of structural resistance levels above price, you will get continued consolidation. And if you've ever wondered, why does this chart consolidate, or why does it just blow through something? It's that reason. It's structure. As you got to this stage in the video, you are awesome. And because you're awesome, I want to share how you can prepare. When you look at Bitcoin, the first thing that we need to be aware of, where are the structural levels? Now, a lot of people will just wait for price to print and say, oh, that must be resistance right there. Just pretend you couldn't see any of this. That must be resistance, because it has to be, because there was a rejection here. That must be resistance, and that must be support, and that must be resistance, and that must be support. And they treat price as a brick wall, not a gravitational area. So therefore it comes up here, gets panged on the head, and then goes down to here and gets panged on the head, and this and this and this, and this is the structure. If you've seen anybody do this, and most people do this, it is utterly wrong. Now, why is it wrong? Why is it utterly wrong? That's a bit of a word, Ken. Utterly wrong. Well, the reason that it's incorrect is because when you look at a chart doesn't trade just for a couple of days. A chart trades for many, many days. Sometimes, literally, it can be hundreds of years or many, many decades. And when we look at Bitcoin, it's been around for more than 7 days. We just say that. So when we look at that, we need to mark up price action across all of price, but we don't want to do it randomly. We want to do it in a structured manner. And that's what level 1 and level 2 standard certification are about. So I'm going to throw on this indicator, and it will show you what level 1 and level 2 standard certification actually looks like for Bitcoin. Now, when we look at this, if you're not familiar with the CTKS method, you'll say, oh God, there's too many lines. There's not enough lines, because these lines are algorithmic lines. These lines are where you know if price is failing or passing, and you have more confluence of lines. That means you've got a higher probability of support. Remember yesterday, I was saying that we've got really light structural support in here. Now, that really light structural support is a problem because price can just fly through it until it gets a mass of structural support levels. And this is why knowing your levels, especially in sell-offs, is vitally important. It's not just important, it's vitally important. Or else you'll look at something and say, I don't know where this thing is going to stop. It's going to stop at structure. It always does. And heavier structure, more lines mean stronger signs. And if you know that song, please let me know the title of that song, and you are extra special awesome. So the question is, how do we prepare? First of all, we need to know where the structure is. Around this 118 level, there's lots and lots of algos that say, thou shall not pass. And they pretty much got it right. Thou shall not pass, and we found structure at 117,200. Came up again, structural fail, structural fail, structural fail, structural fail, another structural fail, and a degree of just consolidation before the VIX started and gold started to just give us the indication, more pain to come. Thank you everybody yesterday who let me know what tokens you'd like us to look at. Now, one of the things, we really can't look at it today because I don't want this video to get too long, but hopefully we'll be able to go through them tomorrow. One of the things that you want to bear in mind when you've got a lot of structure underpinning price, that's exactly what you need and what you want. That is how you prepare. And if you thought Bitcoin was an absolute bargain at 118,000 and you really wanted to buy it, you must be ecstatic at 112,000. One of the most important things that you can do, mark up your charts with level 1 and level 2. If you want me to do it for you, us to do it for you, you can just join the service and you can do it that way. And it's just a trading view indicator that you overlay. But the key is the levels of structure underneath price right at the moment. Just to help out, members who haven't subscribed to the service or haven't marked up their charts with L1 and L2, what you will find around that 111,200 and 110,400 are fairly reasonable levels of structural support. These SCs give you an idea of location, but they do not tell you strength, and around the 108,800 mark. So these are levels that you want to keep your eye on. But in order to prepare, you need to read the ECG of price. The markets are definitely alive, and it takes medical professional knowledge to actually understand an ECG. Is this good? Is this bad? What does this mean? Personally, I couldn't tell you, but I know many members of our beloved global family could. It's very important that you keep your mind positive at all times. Now, this is just not only for your financial benefit, but for your health benefit as well. There's been a lot of studies that have come out recently just saying how you think directly causes how your body heals or the inflammation that you get. It is really awesome stuff. Now, that means thinking positive, being happy is really important. It's the best medicine. And didn't they say laughter is the best medicine? Well, it's being backed by science now. The other thing, when you know where the levels are inside market structure, real market structure, CTKS structure, when you know that, you can prepare. You can see if price is obeying structure or it's starting to weaken and starting to fail. You can see so many different things and you can prepare. In fact, I don't believe it's possible to prepare without structure. Another thing to just bear in mind, a lot of people will sell on red and they'll buy back on green, and then sell on red, buy back on green, but they don't time the bottoms. It's not like, oh, I bought there and I sold there. It's more like I bought there, I sold there. I bought there, I sold there. And that's because of emotion and because people don't know where the structure is. Making sure you know where the structure is absolutely critical, because if you don't know where the structure is, you'll be guessing. And if you're guessing, it means the markets will take from you mercilessly. Why would they do that? Why would these markets take from you mercilessly? The markets aren't trying to punish you, they're trying to help you to learn. And when they help you to learn, they give you losses. Those losses allow you to change your behavior. And of course, when we make losses, we're not happy about it. Nobody is happy. Those losses are lessons, and the lessons you paid for, it's so important that you learn from them. Very, very important. By learning from losses, you will be able to understand that the reason you can't buy the bottom is because you weren't there in the first place. You sold on red, got angry, walked away. You came back when it was green. And that happened because you were not sure where the structure is. Therefore, you didn't have any confidence to just weigh in or to cut your losses. Managing your positions is wildly important to do. Keep on marking up your cheat sheet. Keep on understanding the intercorrelation and interconnection between the different charts, and you'll be ahead of 99% of people inside financial markets. And that's a very important thing to be, because if you just have the knowledge of what everybody else has, you're kind of a victim, because that knowledge can't take you where you need to go. Therefore, if you go to ctksmethod.org and just scroll down like I've done here, you can get your cheat sheet to mastering price action. It's absolutely free and it's totally invaluable. And if you were doing it, you already saw that the VIX and gold were a problem. And with an understanding of structure, you already prepared. If you got up to here, you've just seen a lot of different news that will help you out. AVAX could have a bit of a spotlight. Polkadot could be coming back into the limelight. About time for Gavin. And to let me know that you got up to here, please pop a comment, something about being dedicated and committed. That's kind of our code. I'll know you made it to here, and that is awesome, and so are you. Have a great day or night ahead, my friend, and Kate and I look forward to catching up with you again in the next video. Bye for now.